And students all around the world, this is FXPassion broadcasting you live on YouTube. Namaste Patak, how are you? Long time no see. And everybody, this is Forex Trading Course 101. Remember what we are trying to do. We are trying to build the three pillars. Pillar number one is the strategy and or the system. Pillar number two, we are trying to understand how risk management works inside our strategy and or our system, and the big one, the psychology part, right? We're trying to understand how psychology works in our decision making when we are talking about risk management, and in our decision making when we're talking about executing the strategy and or the system. Hello Husnaini. And what do champion beginner traders say? Talking about psychology, champion beginner traders say that I'm not going to live and die on a trade by trade basis. And of course this is a quote from Mark Douglas, and I have my own quote here on the left. When the market scares you, don't be afraid to do the right thing. What is the right thing to do? Follow the concept, follow the rules. Watch the webinar lesson one more time. Check your strategy one more time. Listen to FXPassion one more time. Those are the right things to do. Hello Tari, hello Liviu. And remember everybody, 90% of traders lose money in the Forex market, and this is worldwide. Okay, and disclaimer, the trading lessons are not trading advice or investment advice. We're here to learn. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. That being said, everybody, let's jump to the charts. And Tari, you sent the question, right? Just give me a second. So Tariq has a question, okay. Which time frame should we analyze the market prior to trading? Confirmation time frame daily, trading time frame 1 hour, because of following reasons. Find the market structure. 2. Identify the market wave. 3. Identify trend inside the market structure. 4. Before entering the 1 hour trading time frame, we must have a confirmation from the daily, yes. And number 5, to identify correctly the stop loss level on 1 hour time frame, we must check the daily confirmation time frame for relevant highs and lows. Yes. Now we just need to clarify. So Tari, yes, congratulations to you. We just need to verify one more thing, everybody. Just give me a second. I need to restart the chat. Okay. So everything that you said, okay, it's true. Just we need to clarify something. What we need to clarify? Different patterns. Okay. So if this is the today's lesson, it's an upgrade. Okay. It's a trading concept. Okay, trading concept for multiple time frame trading. Okay, number 1, different patterns have different stop loss levels on different time frames. Okay, so talking about relative highs and lows, remember what was the pattern that we were trading? Well, we were trading the up market wave, the blue one, right? This is the pattern, and the stop loss goes down here. Just remember that different patterns have different stop loss levels on different time frames. Okay, so today's lesson 13, concepts about multiple time frame trading. you know, what is the number 2? Number 2 is bigger patterns are stronger than smaller patterns. Okay, different patterns have different, so number 1, different patterns, hello SL, different patterns have different stop loss levels on different time frames. Number 2, bigger patterns are stronger than smaller patterns. Okay, now let's open, everybody, Chf Jpy Weekly Chart. Chf Jpy Weekly Chart, right? Okay. Now, do we agree, so this is the chart, do we agree, everybody, that we have strong resistance here? Okay. Do we agree that we have strong resistance here? And do we agree that we have quadruple tops? Do we agree? So this was one top, you know, this was the second top, this is the third top, right? And this is the fourth top. Do we agree on this, everybody? That we have stronger resistance and we have quadruple tops. What would you say? Yes or no? Maybe. What do you think? Everybody? And don't be shy, there is no right or wrong. Okay. Tari says yes. Anybody else? Do we agree here? That we have stronger resistance and we have, so, you know, quadruple tops. What does this mean? The market went up, hit the ceiling and retraced, right? Went down. The market went up for the second time, hit the ceiling and reacted down for the second time. The market went up, hit the ceiling and reacted for the third time. And now for the fourth time, you know, the market hit the ceiling and reacted, right? Tari, yes. SL, yes. Okay, Husnani says yes. Great. Now, so on the weekly chart, just an example, it's how you think, everybody. Remember, you are learning how to think here. Okay? So, the bigger pattern, you know, what is the bigger pattern? The quadruple tops. Okay, this is the bigger pattern, right? Okay, now remember we are here. Remember that we are here. Okay, and remember that maybe because of the limited capital, on a demo account, don't open $1 million accounts on the demo, you know, open a demo account that it's kind of realistic, you know. If you have $5,000, open a demo account with 5,000. If you have 1,000, open a demo account on the 1,000, you know. This is how you learn. So maybe because of lack of capital or whatever, you know, so I'm not entering on the weekly chart. I'm going to trade on the 1 hour chart. Do we agree on this too? You know, that my strategy, my system, I'm entering on the 15-minute chart, 30-minute chart, 1 hour chart, 2 hour chart. Do we agree on this? Everybody? You can say yes, you can say no. You can say, I don't know, I'm confused, help me. And there is no right or wrong. Everybody. Okay, so let's see. Just give me a second, everybody. I need to do something. Okay. And here, just give me a second. Okay, we are back. Yes, correct. Hello, Allah, how are you? Okay, now, so this is the concept that I'm learning, you know, trading concept for multiple time frame trading. Number one, different patterns have different stop loss levels on different time frames, and bigger patterns are stronger than smaller patterns. Okay, so this is the pattern. The four tops are on the weekly. Now let's go to the 1 hour chart. You know what I'm going to trade. What can I see on the 1 hour chart? So just an example, right? Just an example. So market wave on the 1 hour chart. Extension, retracement, extension, retracement, extension. This was an up market wave. Then the market broke the uptrend line like this, and the market started doing down, right? Down wave, right? Extension, retracement until here, right? So those would be two different patterns, right? And we are here right now, right? And the market, you know, it's kind of sideways, right? So it really doesn't matter, everybody, or I'm going to trade the market wave, and I'm going to put my, let's change colors, you know. It really doesn't matter if I'm going to trade the market wave, which is here, you know, or I'm going to trade the sideways movement going long or short, you know. It doesn't matter. You know, it's not going to change the fact that you know, it's not going to change the fact that, okay, let's get rid of this and this, that the bigger pattern is stronger, you know. So we are looking at exactly the same thing from a different time frame. So you have a different perspective, everybody. And look at here, you know, just look at this sideways movement when the market, where the market can go up, you know. You can have a up breakout, but it's not going to change the fact that a down market wave is still in place. Do we agree on that one too? I can short the market when my system or my strategy is going to tell me to short the market, you know. I can short the yellow down market wave on Chf Jpy 1 hour chart, you know. I can put my stop loss in here, you know. And just this is going to be a totally different trade with different probabilities and different outcome than a trader who is maybe trading on a 15-minute chart, 30-minute chart, and is going to trade long and short this sideways movement. Can you understand this, everybody, or it's too complicated? Like it's too much. It's too much. So we have three different patterns. One is the quadruple tops on the weekly, and then we have a down market wave on the 1 hour chart, and we have a sideways movement on the 1 hour chart. And you have different traders all around the world trading different patterns with different stop loss levels. Now, talking about multiple time frame trading, which one is the strongest? Okay, so I'm going to put this on the right, like this. Which one is the strongest? Is the quadruple tops the strongest? Is the yellow line, the down market wave, the strongest, or is the sideways movement the strongest? What do you think? Everybody. And remember, there is no right or wrong. Yes, those are concepts, okay? The question is, which one is stronger? What do you think? You can say, oh, the strongest is the quadruple top, so the violet line, or the strongest is the down, yellow, or the short term. Daily down market wave. No, we don't have the daily, and down market wave, it's not stronger. Anybody else? Quadruple tops. Yes, sir. Yes, sir. So here, right? 1, 2, 3. Always remember, everybody, the higher time frame, and we are talking about patterns too. The higher time frame controls price movement / market direction of the smaller time frames. Patterns too. What about now? The third trading concept for multiple time frame trading. Number one, different patterns have different stop loss levels on different time frames. Number two, bigger patterns are stronger than smaller patterns. And number three, the higher time frame, and we're talking about patterns too, the higher time frame controls price movement and market direction of the smaller time frame. So where is the chart? There you go. So which one should you trade? Tar says the weekly. You know? So everybody, if you don't understand this, and it's okay, there is a learning curve, you know, let's go on the weekly chart. Okay, let's go on the weekly chart. And so those are the quadruple tops, right? 1, 2, 3, 4. We have quadruple tops. One more time, the market went up, hit the ceiling, reacted, went down, you know. So this is the understanding part, you know. The higher time frame controls the smaller time frame. What does this mean? This means that what gives the direction to any pattern on the 1 hour, 15 minute, or let's make it a question now. So this is the question. I'm your student, you are the teacher, everybody. What gives direction to my patterns on the 1 hour, 2 hour, 4 hour chart or 15-minute chart? So this is the question. Technically speaking, right? What gives direction to my patterns, what gives direction to my pattern on the 15-minute, 30 minutes, 1, 2 hour, 4 hour chart? Passion, I didn't understand. Okay, great. So this is the weekly chart, Husnaini, and this is the question for you. What gives direction to my pattern on the 15-minute, 30 minutes, 1, 2 hour chart? What gives direction on my what gives direction to my downtrend on the 1 hour chart? What gives direction to my crown on the 15-minute chart? What gives direction to my down market wave on 1 hour chart? Meaning, why am I seeing a downtrend? Why is the market falling on the 15-minute chart? Why am I seeing a crown on the 2 hour chart and the market is falling? Why am I seeing a down market wave on the 1 hour chart and the market is falling? What gives direction to my patterns on the 15-minute, 30 minutes, 1, 2, 4 hour chart? Husnaini. SL, stop saying daily. We are not on the daily, we are on the weekly. Market structure of the daily, no. Support and resistance on what time frame? Guys, we are on the weekly, okay, not on the daily. We have no daily chart in this lesson right now. Alright? What is giving the direction? You know, or in other words, you know, how, talking about probabilities, what gives a high probability to my trades on the 1 hour, 2 hour, whatever chart? What is giving the higher or better probability? Or in other words, Husnaini, so, and everybody else, the next question is, should we be shorting the market or going long on the smaller time frames to have a greater probability? Those are concepts. Husnaini, market structure on what time frame? Yesterday you said 15 minutes, 30 minutes, 1 hour, 4 hour. Yes, everybody, yesterday was yesterday. It's normal, you know, sometimes it's confusing. Let me find the chart. Jpy. So, thank you, SL. So one more time, everybody. Yesterday the lesson was about the trading time frame and the confirmation time frame. Okay? Patak shorting, yes sir. Daily is the confirmations. Okay, so everybody, let's calm down. Okay, now stop. let's calm down, okay, let's pause, breathe, breathe, So yesterday the lesson was about the trading time frame and the confirmation time frame, right? And we were saying that before entering a trade, this is the relationship. When we are trading on the 5 minutes, 15 minute, 30 minute chart, our confirmation time frame is the 1 hour, 2 hour, 4 hour. If I'm trading on the 1 to 4 hour, my confirmation time frame was the daily. And if I'm trading on the daily, so this was yesterday, right? Today we are trying to upgrade your knowledge, everybody. Okay, today we are trying to upgrade your knowledge, and yesterday what we talked about. So I'm guessing, everybody, you didn't watch the recording from yesterday 2 or 3 times, did you? Husnaini and SL, Husnaini and SL and Tari, you didn't watch the recording from yesterday 3 times, did you? Everybody. And yesterday we were clarifying too, it was, remember I told you yesterday, this is an introduction to multiple time frame trading, remember? So why is confusing? Well, don't mix apples with bananas. When we are talking about the confirmation time frame and the trading time frame, we are talking about the confirmation time frame and the trading time frame. And when we are talking about the multiple time frame trading, everybody, this means that we are including and talking about all the 4 charts, all the 4 time frames. Okay? Better for your clarification? So we are not talking about just the relationship between the 1 hour, 2 hour and the daily. We are talking about the relationship between all of them. Make sense? Yes, I did, but one time. Not enough. It's not enough. This is multiple time frame trading. Twice only, not enough. And if you are, when you are looking the lessons, everybody, and you are on Facebook and chatting on WhatsApp and Instagram or on Twitter, this is a no-go too. Anyway, this is the multiple time frame trading. Okay? And see, everybody, here from yesterday, higher time frame controls price movement and market direction on the smaller time frames. See? So what does this mean? This means that the monthly chart is going to control the weekly chart and the daily chart and the 1-2 hour or the 50-minute chart. The monthly chart is the grandfather. The weekly chart is going to control price movement and market direction on the daily chart and the 1-2 hour, 4 hour and 15 minutes. Not the monthly anymore. One time. Thank you for being honest. Not enough. The daily chart, everybody, is going to control the price movement and market direction on the 1 hour, 2 hour, 4 hour and 15 minutes. But not on the weekly and monthly. And finally, the 1 hour, the 2 hour and the 4 hour chart is going to control price movement and market direction on the smaller time frames, which are the 15-minute chart, 30-minute chart, 5-minute chart. This is the explanation of the concept. The higher time frame controls price movement and market direction. Okay? So when we are looking at the Chf Jpy Weekly Chart, okay, this weekly chart, and one more time, I'm not talking about the confirmation time frame. Today we're not talking about the confirmation time frame. Today we're talking about the multiple time frames concept. So when we are on the weekly chart, and the weekly is going to control price movement and market direction on the daily, 1 hour, 2 hour, and 4 hour, you know, then we are asking those kind of questions. So if I have quadruple tops on the weekly, what is going to give direction to my pattern on the 15-minute chart, 30-minute chart, 1-2 hour chart? And the next question is, should we be shorting the market or going long on the smaller time frames to have a greater probability? So let me see how we can do this. We are going to out and like this and like this. Let's do it like this and okay, so this is what we are talking about today. Thank you for the comment. SL, thank you very much. And please guys, if you have any questions, just ask, okay? Can you see everybody what we are talking about? Can you see what we are talking about? I cannot. So we have on the left side you have the class from yesterday, and on the right side is today, right? We are trying to upgrade your knowledge. Okay, so we are on the weekly chart, and we just said and explained to everybody that the weekly chart is going to control price movement and market direction on the smaller time frames. So back to the question on the right side. It doesn't matter what pattern I am having on the 15-minute chart, 30-minute chart, 1 hour chart, 2 hour chart. Could be an uptrend, right? Could be a up market wave, right? Or could be a crown reversal, you know, or head and shoulders, whatever, you know. So what gives direction on Chf Jpy on the 15-minute chart, 30-minute chart, 1, 2, 4 hour chart? What gives direction to the smaller time frame? What's the answer? It doesn't really matter downtrend or uptrend on the 1 hour chart on Chf Jpy. What is giving direction to a downtrend or an uptrend on the 1 hour chart, or 15-minute chart, or the 4 hour chart? What is giving direction to the smaller patterns, to the short-term trades? And this is why we keep losing, everybody. We don't understand. And yes, there is a learning curve, okay? You cannot expect to learn this in a 1 session or 2. You are going to need 2 or 3 months. What gives direction to my pattern on the 15-minute chart? Bigger time frame, more specifically, what time frame? Specifically for this example. One more time, everybody, we are not learning trading, time frame and confirmation. We are learning multiple time frame trading today. Don't mix apples with bananas. What gives direction to my uptrend? Higher time frame, which one? Weekly, exactly, Tari. The weekly chart, specifically today, specifically in this lesson, the weekly chart is giving direction to the smaller time frame. So, what would you say, everybody, if the weekly chart, with the weekly chart is giving direction, if the quadruple tops on the weekly chart are giving direction to my smaller time frames that I'm trading on. Could be the 15-minute chart, 1-hour chart, whatever chart. So what makes more sense? To go short or to go long? Because on the smaller time frames you have all kind of patterns. You have uptrends and you have downtrends. You have the up market wave and you have the down market wave. So from a probability standpoint and learning those concepts, that the higher time frame controls the smaller time frame, that the bigger pattern is stronger than the smaller pattern, should be wiser, not right or wrong, there is no right or wrong. You have traders going long, you have traders going short, but probability wise, would it be better for me to go short or to go long? SL says short. Short. Short, short, short. Great. Now, here is the kicker. Golden nugget for you, everybody. If you understand this, and you are on the 1-hour chart, what is the next logical answer? So if shorting the market, it's wiser, probability wise, it's better, wiser, okay, then when I'm choosing to trade the down market wave, the yellow one, and the sideways movement, which one has a greater chance of success? Should I be trading the yellow down market wave and put my stop loss up in here, or should I be trading the sideways channel, going long or short, or just going short? It doesn't matter. You know, what should we do? Smaller time frame trade is not affected by weekly. Short term not, long term yes. Tar, if you're talking about the trading time frame and the confirmation time frame, short term not, long term yes. Okay? So everybody, which one has a greater chance of success? Probability speaking, you know, we don't have a crystal ball. We don't know what the market's going to do. The market can do anything it wants, when it wants. Right? But if you are using the same logic, talking about the weekly chart and the bigger time frames, and one more time, be careful, we are not talking about the confirmation time frame and trading time frame. Short yellow structure. Congratulations to you. Correct answer. Now, why? Yellow go short for best. Congratulations, Tari. Yes, sir. Why? If you understand why, you learned something today. Congratulations to you. So, one more time, somebody's angry. One more time, let's clarify. It's not that you should not or cannot trade the sideways channel. Yes, you can. You can use the concept and the rules from the sideways channel trading. Yes, you can. Okay, we're not saying that you cannot do this, but comparing those two, which one is stronger, safer, or otherwise probability wise? I mean, otherwise has a greater chance. And Tar and SL are saying yellow, yellow, and the answer is absolutely yes. But my question as a teacher is why? Do you understand the why? Because it's in a retracement leg. Sure. So what? I have a trader now asking, okay, but why shouldn't I trade the sideways channel? Why shouldn't I enter the next bullish candle, you know, then appears and the market is going to break the counter trend line, and why shouldn't I take a trade up to here? Why not? What's the answer? It's a retracement leg. Yes, it is. But still the trader is asking the question, okay, yes, I can understand this. Yes, it's a retracement leg, right? But still, you know, why teachers, why are you telling me that it's better not to trade this sideways channel and it's better to enter once it starts the extension leg, you know? Inline weekly overall direction, sure. But I'm still, you know, I can understand this, but still, you know, weekly structure and 1 hour yellow structure are in line. Yes, sir. So this is the answer, everybody. Why can't I? You can trade both of them. You can trade both of them, okay? But talking about probabilities, this market is going to do something, or is going to break up, or is going to break down, okay? And this is going to be a loser trade, most likely, especially if you are not managing the trades correctly, or you are not in front of the computer, you know. This market is going to do something, okay? It's going to, this is a fact, it's not going to stay sideways forever, it's going to break out or down, we don't know. And if you are if it happens that you are in the wrong place at the wrong time and you cannot predict this, why would you risk having this loser? This is the logic behind. So one more time, it's not that you can't, you can. You can trade the sideways movement, but just remember that you are going to have most likely a losing trade too, when the market is going to break out, up or down. You know, so probabilities, right? So why would you win one to lose one if you know that this is going to happen? You know, this is me working for nothing. You know, I have one winner and I have one loser because the market is going to break out. And somebody is saying, well, what if the markets continue to go sideways so I can win 5? Well, now this is the trick why we are losing as beginner traders. We cannot trade based on what if, everybody. You know, yeah, but what if the market continues for 3 months? What if this? What if an asteroid, you know, hits Earth? What if the sun is not going to come up tomorrow? What if, you know, we cannot trade based on what if. So yes, you are free to trade the sideways movement, just be aware that you are going to have a loser too. Most likely, I don't have the crystal ball, you know, or if you are going to trade the sideways channel, find some. Now we are getting out of the scope of the multiple time frame trading. If you are going to trade the sideways channel, then yes. If you are trading the sideways channel on the 15-minute chart, then you are going to use the knowledge about the trading time frame and the confirmation time frame. but we're out of scope of the multiple time frames trading. Make sense? So this makes all the difference. And one more, talking about the short-term patterns and the big-term patterns, you know, it's not a rule per se, it's a concept. 7, 8 times out of 10 the market is going to go in the direction of the bigger pattern. Okay? To make it a little bit more difficult, everybody, let's say that it's not sideways, let's say that it's an uptrend. It's a down retracement. So the question would be, should we go long on the short-term uptrend? And you have a webinar from yesterday showing you why we lost. We have a down market wave. This is the bigger pattern, and the sideways movement and the short-term uptrend are the smaller patterns. And this is a concept. 7, 8 out of 10 the market is going to go in the direction of the bigger pattern. What does this mean? This means that yes, sometimes I'm going to win on the smaller pattern, but I cannot break the rules and think, everybody, I cannot break the rules and think that, oh, this is what I'm going to trade always and this is what's making money. No, this is what is making you to lose the money and pips. One more time, why? Simply because of, where are we? Because of this. So, starting from today, everybody, every time that you are losing, check on what pattern are you trading. Learn and practice. The different patterns have different stop loss levels on different time frames. Learn and practice that bigger patterns are stronger than the smaller patterns, and learn and practice that the higher time frame controls price movement and market direction of the smaller time frames. That being said, we are over. What is your next level? Number 3 today. If you are losing time and money, and if you are not capitalizing on the trading opportunities, and if you are missing entries and setups, you might consider trading with a professional charting software, next generation, and take advantage of technology. And no, it's not a platform, okay? In JForex you have both. You have a trading platform and the charting software. We are combining them, okay? But still, if you are missing an entry setups, you might consider add something, you know, to your arsenal, right, to trade better. And it doesn't matter next level, number 1, 2, 3, 4 or 5. The bottom